In this video, I'm going to show you how you can find the best cryptocurrencies to invest in using parallel channels. I recently used this exact strategy for my own trading to make some great profit on this move in Factom. Hi, I'm Doug Lampe, the founder of DigitalCurrencyTraders.com, a cryptocurrency trading course and community where thousands of people from 70 countries around the world have come to learn how to trade cryptocurrencies. You are going to learn the only 3 things you need to know about using parallel trend lines to identify great crypto trade signals. So keep on watching. When I was just starting crypto trading, I found myself jumping in and jumping out and jumping in and out of trades way too often. Even though I had a basic altcoin trading strategy that I was trying to follow, I found myself constantly watching the charts, always thinking the price would go higher, and I didn't want to sell out. Maybe you've invested in some of the best cryptocurrencies and saw some fantastic gains, but you didn't take profit at the right time and you saw your gains dwindle away. Needless to say, this is frustrating. I knew that cryptocurrency projects would be changing the world, and I saw the prices making dramatic moves. But sometimes I took profit too soon and I saw the market keep going up without me. Sometimes I held a profitable trade until it turned into a small loss. Sometimes I didn't take that small loss and it grew even bigger. I learned the hard way when I should cut my losses and when I should take my profits. And I'll tell you, being a bag holder and waiting for the market to eventually come back is just not a good investment strategy. Trust me. Fast forward to today and I've learned to focus only on the best altcoin trading strategies. And as a result, my trading is more relaxed, profitable, and consistent. My secret? I went and learned everything I could about identifying the top undervalued cryptocurrencies by watching the charts for simple patterns that repeat over and over again. Unfortunately, most of the advice that I originally found was complicated and contradictory, and it just didn't work for me. Maybe you know the kind of trading advice I'm talking about. Things like Elliott wave principles, Fibonacci retracement and Fibonacci extensions, Bollinger Bands, momentum oscillators, market cycle trading, linear regression curves, and the list goes on and on. Now sure, that stuff can help, but it's not going to rocket your Bitcoin and altcoin trading to the next level quickly and easily. Why? Because many of these methods don't agree with one another. They are overcomplicating something that's actually quite simple. And this causes all sorts of fear and uncertainty and doubt. You know that word, FUD. After following the popular crypto traders on TradingView and Twitter and getting nowhere, I decided to run some experiments myself. And that's where I learned what really works and how simple it really should be. Specifically, I discovered a few chart patterns that work consistently to find the best altcoins and tokens to trade. These are simple trading methods that most people overlook. Once I focused on these strategies, there was no more second guessing my entries and exits. No more missing out on important direction changes. I started being more relaxed in my trading, and I started to make far better profits much more consistently. Now it's time for me to share this incredibly simple method of using parallel channels and show you exactly how to use them to improve your crypto trading success and your profits, starting today. Let's start with step number 1, how to draw parallel channels correctly. You may have noticed that cryptocurrency prices often move in a strong direction, then they pull back, then they surge in that same direction again. Why? Well, it's often because the news comes out and travels across the social media sphere quickly. And then prices retrace as people are either taking profits or maybe selling their cryptocurrency mining earnings because the prices are good. Over and over again, these waves will happen as the market is trending in one direction or the other. Even though these waves of movements are important, they are not nearly as important as the trend that they are following. And that's because the big money is made in staying in that trade until the trend is finished. If you try to jump in and out on every wave, you end up missing the big move. And worse, you spend many hours watching the Bitcoin price chart, fretting and worrying about the markets. Have you ever gotten up in the middle of the night to check your Bitcoin prices on your phone? Well, this strategy will help you get more sleep. The more you understand about parallel channel lines, the more relaxed you will be as your cryptocurrency price chart is making all of these waves of movement. Instead of feeling panicked every time the market changes direction, you'll have a clear vision of when it's really time to take action. You'll have a better idea where to place your stop loss orders, and it will be easier to know exactly when to take your profits and look for another opportunity. Now let's dig in, and I'll show you exactly how to use this tool on 4 different examples. As I said, longer trades tend to make more money because they capture the entire trend and not just one of the waves within it. But there is one big problem with this approach. You have to be willing to give up some of your unrealized profits for the potential of making even greater returns. Fortunately, my experiments have taught me that if you get these parallel lines drawn early in the move, you have a better idea about the right time to close your trade and take your profits. In fact, if you focus on just 3 points in the chart, you can maximize your profits over time. Now the question is, how do you identify these points early in the setup of the trend? The answer is called the 1, 2, 3 bottom formation, and this is exactly how it works. The first step is to watch for when the prices are coming down to the lowest point in a recent time frame. This could be the lowest price in a week, it could be the lowest price in the past few months, or it may even be the lowest price of the day. The second point is after the prices have risen off of this low point and gained some ground, but then the prices pause and they start to pull back. Then after the prices have begun to rise again from this pullback spot, we have all the information we need to draw our parallel trend lines. It's really that simple. When I first started having success in trading cryptos, I was always looking for the 1, 2, 3 bottom formation, but I still wasn't clear on when it was time for me to get out of the trade or to take my profits. Now that I've added the parallel channel to my trade entry method, it's much easier to identify when to get out of the market and gratefully take the profits. Now I cut out a lot of worry and second guessing, and I have a plan that lets me know exactly what to expect. Alright, now it's time for the proof. Let's pull up some examples of how this has worked in some very recent crypto price charts. I am certain that in the next few minutes, you will completely get this technique. You will be able to use it today in your crypto trading and from now on. Not only are you going to be better at finding the best cryptocurrency to invest in, you will have a handle on when to take your profits. You will feel the accomplishment and the gratitude and move on to find another opportunity with even more confidence in your ability to identify the greatest crypto trade signals and make your money work for you. After these 4 examples, I'm going to share an extra tip that'll help you identify these patterns with even more certainty. Let's take a look at our first example here, Linkcoin. We can see that prices were on their way down all the way through 2018 like most of the cryptos, and then it was in the beginning of August that it hit the lowest price. Prices rose up and then they came down, and those are the points that we need to fill out our trend line at the very beginning of the move. So we can start off by filling it out this way, and then we can extend that all the way along, and it gives us a very good idea of how this trend is going to play out over time and where the important points are for our trading methods. So we want to stay in the market so long as the market is within this trading range and within our support and resistance levels all the way along. And then as the trend continues after that, we know we can stay in the trade until prices come across and break down further from technical levels. And in this market, it stayed in the trend all the way along, even until now in the middle of November of 2018. In our next example, let's look at Civic Coin. We can see that prices were on the same downtrend all the way through 2018. And then when prices made their final low, they came up and retraced a little bit. That gives us all the information we need to draw out our parallel trend line. And we can see that this trend line kept itself going all the way up, and when the prices broke below that level, it was time to get out of this market. And it's very clear once you get used to using these parallel trend lines when to actually get out of the market. And now let's take a look at Golem Network Token, or GNT. This is an interesting chart because it actually has a couple trend lines that we can use here. We can see that the markets were in a very solid downtrend all the way in a straight line that kept staying inside that trend line. Then when prices made a bottom, they came up and retraced a little bit. They gave us all the information we needed in order to know how this trend line was actually going to be playing out. Now we can extend this all the way through, and we see how accurate this is, in that the prices came all the way up, they stayed inside this trend, and when they fell out of that trend line, it was time to close our position. And our final example shows even more fantastic trend line channels. We can see in hindsight that the trend lines was on a downtrend all the way along. And then we had our 1, 2, 3 bottom formation, and that gave us all the information we needed right there to draw out how this trend line was about to play out. So as this played out, we can see that the prices continued to go up. They never gave much of a sell signal. They kept going above the trend line and above the trend line. And finally, when they did break down below, this is when it was time to sell out and get out. The great thing is that it also did another trend line on the way down from here as well. We can see just as clearly that this stayed within a very narrow trend range. And now, as I promised you, here's that extra tip for added certainty. I want to share this extra piece of information that'll help you boost the success rate of using these simple trend lines to improve your crypto trading profits. This is one indicator that I recommend for cryptocurrency trading because it gives simple and clear signals that really match to what's going on inside these parallel trend lines. And it is called the Relative Strength Index. And you can see here that I have another tutorial video on YouTube for beginning cryptocurrency traders, trading cryptos with RSI. Now let's go back and look at our example charts to see how this adds extra confidence to these example trades we just reviewed. So here we are looking at GVT again. This is the Genesis Vision token. And let's bring up the Relative Strength Index. There are two really important times in this chart. The first is when the prices made the bottom formation, and the second is when they made the top formation and it was actually time to get out. So let's zoom in on the charts here and take a look at this bottom formation. We can see that prices made a little bit higher highs here, but the Relative Strength Index made significantly higher highs. This is called an RSI divergence, where the Relative Strength Index is different than the price change above. So this is the RSI diverging from the prices. And this tells us with added certainty that the markets are turning around and not going to continue down further on this trend that we saw coming down and down and down. And then if we zoom ahead to the end of the chart, we can see that prices made higher highs here, made a higher high, but at the same time the RSI made lower highs. This is another divergence that tells us that this uptrend move is running out of steam and that prices are going to falter from there. Let's take a look at the other examples. Here we are looking at the price chart for GNT again, and let's zoom in on this bottom formation right here. So we can see prices came down and they went to lower lows, but at the same time we see the prices were here and they went to lower lows. But at the same time, the RSI was showing higher lows through this period. So this is another indicator that's showing us that the market is running out of momentum on the way down, and it's likely to be changing directions. Then as we get up to the top of the channel here, we can see much the same thing, where prices were starting to fade off, but the RSI was fading off far stronger. So this is another indicator that the prices have reached their peak and that they are losing power. And sure enough, prices came back down from that level we can see now. And here we are looking at the prices for GNT again. And one of the things we want to look for is where the prices are making the bottom formation. And we can see here again that prices made lower lows here, but the RSI was making higher lows. And this is showing that the downward momentum is running out of steam and there is more power coming into the market. And then we can also see the same thing happening at the end of that uptrend, where prices were fading off a little bit here, but the RSI was dropping steeply, which is showing that this little move upward was running out of steam and that prices were going to be coming back. And of course, we saw this long before Bitcoin prices took their major dive here just a few days ago. And now here we are looking at the price chart for Civic Coin. And let's zoom in on this bottom formation here and check out the RSI signals. And again, this one isn't quite as strong, but we can see that prices were on a bit of a downtrend still, and the RSI was changing directions and it was stronger. Then if we go over to the end of the trend here, we can see that prices were going up, but the RSI was not agreeing with that. So this is another divergence of the RSI as the prices are moving, and a strong indicator that this is running out of steam and that something is coming. Sure enough, we can see in the price charts after that, the prices fell back. And again, this indicator was coming in long before Bitcoin made its crack down and drew all of the cryptos to come down. All of the cryptos knew it before Bitcoin did. And here's our final example. Let's take a look at Link. So if we zoom in on this bottom formation here and see what was going on, here's another example where we can see prices. The price chart was showing lower lows, but the RSI was showing higher lows or staying steady. So there is a divergence going on there. And then as we zoom up to the end of this channel and we see where prices have gone up to, now as we zoom in on this, especially if we start using a closer time frame and we start looking at the 1 week view, we can see here that prices were topping out and going higher, but the RSI was showing that it was failing out. This is the end of the movement here. We're actually seeing a 1, 2, 3 top formation that failed here as well. So as prices broke down below these levels, this is a little bit of a head and shoulders top formation showing that prices are coming down from here. So it will be very interesting to see how this specific chart plays out over the next while, as we've just identified a very strong RSI divergence at the very top of this move. And it's also very interesting to see that the top of this move really matches where historical prices have been back in early 2018. So to see that RSI divergence at this top of the channel, of the top of our trend, is giving us a great point to know that we should be taking profits. And we'll see how this turns out after this video is done. And so there you have it. You've learned the only 3 things you need to know about using parallel channels to identify great crypto trade signals. And you have the added bonus of helping to get more certainty in your trades by using the Relative Strength Index. I hope this video will help you find the perfect time to buy and exactly when to take your profits in the future of your cryptocurrency trading. Thank you very much for watching how to find the best cryptocurrencies to invest in using parallel channels. Now, I have an assignment for you. I'd like for you to leave a comment below this video to let me know when you find a market that is making these kind of formations. As soon as you find a market like that, come back here, leave that comment, and I'll go through and look at that chart and reply to your comment as well. So I look forward to hearing from you. I hope that this is a tutorial video that turns into a practical application lesson, that you actually go and use it, and you come back here and let me know what you found, and then we can converse back and forth about that exact market. And again, this strategy can be used all times into the future. So I expect that you can be watching this video 2 years after I made it, and they're still pertinent to leave a comment below about whichever market you are finding that is making these formations and that are running up into these parallel channels using the RSI to find the entries and the exits. And I can't wait to hear about your success stories. Thanks again for watching, and good luck in all of your cryptocurrency trading.